are going to go ahead and kick off our big day here with Melissa Armo. Melissa is the founder and owner of the stock Swoosh, and you may have seen her on TV. She does do a lot of market commentary, and I know she was just on TV last week, probably even already maybe this week, Melissa. But yeah, we're happy to have her here with us today, and I know you have a great presentation in store. So I'm going to go ahead and let you get started.
Testing, testing. Can you hear me?
Yes, yes, I can.
Great. Let me try
I'll
to
stop.
set up the slides. Let me know if you can see the slides.
Yes, looks good.
Perfect. Good morning, everyone. It is a very hot day here in New York City. It is July. It is earnings season. It is an exciting time to trade. Thank you so much for coming today. So today we're going to talk about a strategy you can trade under any market condition, which is important because if you've been trading since the January, since the beginning of the year this year, we're more than halfway through the year, we have had a very wild market this year. There's no doubt that we have had a bullish market. It is bullish. That's a fact. Are we going to continue going up? Are we going to continue making new highs? I think a lot of that, and again, I did talk about this on TV last week, a lot of that has to do with earnings season. So earnings season really is going to be the driver, I think, for July and August and what happens with the market. And even though it's summer and it's a fun time, you can go out and do stuff in the summer, it's actually a really good time to trade. So if you have any good questions, again, I appear on TV. You can plop it in the room. I talk on Fox and Fox Business about markets. You can always email me at melissa@thestockswoosh.com or call me at 929-3200-GAP. So again, it's summer and it's officially earnings season. We kicked off earnings season yesterday. We shorted Wells Fargo, which I'm going to talk about. JPM had earnings yesterday. Goldman Sachs had earnings this morning. Morgan Stanley. We always start out earnings season with the banks. And again, the banks are going to drive what the market does even today. These are very large banks. And one of the concerns for banks has been what? Inflation, interest rates not going down as fast as everybody wants them to. So what is earnings season? We have 4 quarterly earnings seasons a year. And during earnings season, companies report their previous quarter earnings. And usually the stocks have a big move. Is it up? Is it down? You don't know until the earnings come out. So it's rare that I will play a stock into the earnings. I usually wait until the earnings occur. And then I developed a system where I will rate the stock using technical analysis, how it's gapping to determine how to trade it on the earnings. And again, I'm going to talk more today about what is a gap. But here was yesterday's trade. It was a great trade, okay? So I'm going to go over an advanced trader risk and a beginner trader risk, again, because everybody has a different amount that they can do. You could also have done a put, but this was a short. So again, let's go over what is a gap. A gap is the difference between the close and the open. So up here, snug as a bug, the 14th, which was Monday. This is Wells Fargo before the earnings. Okay, this is before the earnings announcement. It closed up here green, then it gapped down in the morning, opened, rallied, dropped. And we shorted this. Entry, this was a day trade. Okay, so you would have needed a margin account to do this trade. 80.30 was the entry. I added at 80.20. Okay. Average price was 80.25. Exited at 78, and I had 9,000 shares of this. Now, I did not do a put in this. I sort of wished I had. It went so quick. It went really, really fast, and I was ready in the day trade. But if you didn't have a margin account, or if you didn't want to pay, what the cost to take this position was on margin, you could have bought a put. Now, I don't know because I didn't do it what the puts cost, but you could have done like an $80 put. Or you could have even done like the 75s and made money and got in, got out, because it had a beautiful, beautiful sell-off on the day, which we're going to talk about more. Profit, $20,250 in one trade in one day. Again, this is the power of the gap, and not only that, shorting, which we're going to talk about more. If you only risked $1,000 and took 1,000 shares, again, this is a day trade, this is a margin trade, added, okay, at the same spot I did, average cost at 825, got out at 78, this actually broke 78, by the way, you could have made $4,500. Trades like this I see constantly, all the time in earnings season. They're everywhere. They're just this is the best time to trade. Again, we have a fall earnings season, but right now we're in summer. Okay, so these are the types of moves you want to capitalize on when you get them. And again, you don't know when you're going to get them until you get them. So you have to be prepared. You have to know what to look for. Everything I do, I'm figuring out what I'm doing way, way, way before the open. Like sometimes I'm up at 6 a.m. deciding what I want to trade, 7 a.m. We've seen a lot of early gaps going into the period which we've had the tariff stuff happening. And again, this is a short, which I'm going to talk today because again, I prefer to short. So I'm also going to show you results year to date. This doesn't include the last week and a half, but I will update that and put it on my YouTube. Over 3 million for the year with day trades and options. I risk more in my options. You don't have to do that. You could do one. You don't have to do day trades and options. I do both, but I hold options longer. So I wanted to show you this is all the trades I did so far through the end of June. 634,082. Average risk is around $4,000 per trade for my room trades. I called all these trades live in the room. They were mostly shorts, which is what we're going to talk about today. So the win ratio year to date, again through the end of June, is 63%. First 6 months of the year. And the options, I risk more. And that's my choice because I want to do some pricier puts or calls. One of the nicest trades we did recently was NVIDIA. We did the 160 NVIDIA calls. We did the 170 NVIDIA calls. That gapped up the other day. That's been a nice trade. In fact, the target on that has just been raised to 180. You know, I don't know how long it takes to go there, but that's gapping up this morning. So again, while I prefer to short, I will do longs if I see a good one. So I'm risking more for my options, 69% win ratio for the year on options. And again, if you want to do one or the other or switch them out, if you don't have a margin account, you can do one or the other or both. So those are the stats so far this year if you have been trading with me or if you would have traded with me. Now, again, lots of people, I talk to them constantly. I teach a class once a month, my method that I do every day. But a lot of people trade, they feel like the market kind of is always off the rails and they're always doing things and it never works out and it's choppy. That's life. That's trading. That's something that you kind of have to accept. But if you have the right mindset, okay, that you are in charge of your life, you're going to be able to make it. You're going to be able to do this. And even if what you're doing right now, trust me what I'm saying, even if what you're doing right now isn't working, if you keep pushing forward for the answers, you will be led to someone that will teach you a method and a strategy that works. So again, it is possible to create the world we want. A lot of times I talk to people, again, I don't know what the percentages of clients that I have that are retired or semi-retired or, you know, over the age of 60 or even 70. Lots of times I talk to people and they feel like, oh my God, I'm too old, I can't do this, well, I understand it. Listen, if you have that attitude, it's going to affect your whole life. You have to think positively. And I know this sounds like probably a broken record, but it's more than that. It's that you have to take charge. You have to take charge. You can't go into the market feeling like you're going to lose or like a victim or in fear. Okay, trading in fear is the worst thing possible. Worst thing possible. So again, you are not too old. You're not past your prime. In fact, my father's coming to visit me this weekend. He sometimes complains and said he's too old, this and that. I said, Dad, no, you're not. No, you're not. We're walking around New York City. We're doing this. We're doing that. I keep him moving, okay? You've got to step outside of your box and feel like, wait a minute, I'm not living this life of limitation. I actually am a limitless being, and I can do lots of things, and my age is not going to hurt me. In fact, if anything, if you've been alive on this planet for a long time, you're probably very astute, very intelligent, very aware, very knowledgeable. You probably had tons of experiences that someone that's very young has not had. Even with the market, even if those experiences weren't positive, weren't good, even if you took trades and lost money, you gained experience, okay? That's made you smarter. It's made you wiser, okay? I've been doing television for 10 years. Marissa mentioned that. I've been on TV for 10 years. When I first started, I was always someone that could talk in front of a lot of people. I used to be on stage and do plays and theater in high school and college. But I was I've changed. Looking back at my hits from 10 years ago to now, I'm a lot more comfortable on TV now than I was then. And I can talk off the cuff, and I don't have to have something prepared before I go on TV. I just have it in my head and I say it out loud. You will get better the longer you train, and the more you push forward to the right strategy, the right system, you will find it. The right people, the right mentor, you will get there, okay? Know that you are in charge of your own life. A lot of people are trading, feeling victims, and they're in this box, and they're only seeing things from one perspective. If you're losing, you got to change what you're doing. I mean, that's it. And sometimes you just got to stand up, get outside of this box. There's a whole world out there. And again, I don't care how young or old you are, you have all the time in the world. People are living now into their hundreds, okay? Everyone's on a health kick nowadays. People are all in the health crazes. And again, all that matters is you being happy right now today. And if you're stuck in this box and you're miserable, you got to get yourself out of it, okay? And usually when I'm talking about this in reference to trading, again, the box is you feel like you're not getting anywhere. You're going in a cycle. You make money, lose money, make money, lose money. You're not getting anywhere. Get out of it. Change something that you're doing to get out of it, okay? And get a different perspective, okay? So anyways, if you want to do this full-time, part-time, I'm telling you, you can. You can do it. It may seem impossible, but it's not, okay? You just need the right tools to be successful, and you need the right tools to get good results. So I developed a system. It took me 3 years. When I was doing it, when I started it, I didn't know when I was going to figure it out. I had no idea. I thought it would take me 6 months. I said, listen, I can do this in 6 months. It took me 3 years. So even if you've been trying to trade and trying to be successful and invested money in classes and the market, even if you're not there, let me tell you something. If you quit, you definitely will not make it. That I can guarantee you. You want to guarantee if you quit, you won't make it. You won't ever make it if you quit. So guess what? You want to make it, don't quit. You have to keep moving forward, like I said. And this is where I was at this point in my life. And I really wanted to change careers. I was doing mortgages. Again, it's based on technical analysis, which we're going to talk about today. And I'm going to talk about why that's so critical. But I get up in the morning, I rated WFC and determined that the stock was gapping down and was going to keep falling. And it was a short. And so this is a system that I do every day. I never skip it, okay? And I use it to trade. I use it to call the trades in the room, all the stats that I showed you. I rated every gap that's in there. Sometimes it takes me an hour. Sometimes it takes me longer if it's really busy. Sometimes there's not a lot to look at. I could rate all my gaps in 30 minutes. But it's something that I do to prep every day. It's something that you can learn. It's not beyond the realm of comprehension, and it's what I teach in my class once a month, okay? So anyways, let's talk about Tesla. Everybody's watching Elon Musk. Some people love him, some people hate him. Whatever your opinion of him is versus the company, this stock has been on a wild ride this year. There are people that are buying every dip in this, and then it drops again. Then he tweets something, then it collapses. I don't know what this is going to do in the earnings. I will tell you, talk about earnings season. This is earnings next week. So this is a big, big watch for me. I'm not going to trade this into the earnings because God knows where it could go. It can make brand new all-time highs and go over 500, which I thought it would last year at the end of the year. It had a beautiful rally from November, December. We were long it last year. But we have shorted the crap out of this year, to be honest with you. We really have. And again, whatever the reasons are, it's gapping is insignificant. The fact is there was money to be made shorting the stock this year, and we've captured it, okay? So this has been one to watch and is one to watch if you want to watch earnings next week. I forget if it's the 23rd or the 24th. You can look it up in a calendar. Anyways, one of the days, talking about shorting, it's a beautiful, beautiful, beautiful gap, 6.5, okay? 6.5, we shorted this. I mean, this went the same day. I didn't even know it was going to do it the day I did it. But it was a good gap. We did the 300 puts. So again, I was talking about doing options. I do options too, but I hold them longer than 5, 10, 15 minutes. Here was the day that I called the 300 puts. So here was the gap. Stock close here, gap down. I called this trade at 940. 940. Oops. Like, it was like around here. It was way above 300. Again, I gave it out a week and a half. It didn't even need it. It's ended up going all the way down in here to 273 and change. It was an insane move. But this is, again, the power of shorting and the power of the gap. Cost was 550, which for Tesla, I considered cheap. Again, I've been trading a long time and risking around 9,000 a trade. Got out of this at 32. I had a good exit on this. Not the low of the day, but close enough. And I made over $45,000 with this trade, which was a 482% return investment. Now, is every trade I do like this? No. But this definitely happens with some of my trades. And it covers the ones I lose in, which again, going back to the stats, I've had losers this year. I don't win in every trade. But trades like this cover the losers and get me ahead. And that's what you need. You gotta have some big winners. You gotta have big winners. Again, NVIDIA's been a big winner for us this week. If you did 1,100, you could have made 5,300. This is a type of, life-changing trades for people when they have a very, very small account. Somebody's got a $10,000 account and they risk $1,100, which is okay. That's fine to me. 2 contracts, then all of a sudden their account's up over 15,000. And again, if you don't have a margin account and you're trying to get to that $25,000 benchmark with a retail place, options are a good way to do it. You got to be willing to hold them for the drag. And again, in reference to this, if this had not dropped like a brick here, then I probably would have held it overnight. But it would have been ridiculous to hold this overnight. It was too big of a move, too much money, too quick, too fast. And you have to take advantage of moves like that when they occur. Okay? Okay, so anyways, getting back to what I was saying, this type of market, it's bullish. I know. But guess what? You can short in any market. Why do I like to short? Why can you short in every market? You say, how can you short in a market that's screaming up and making new highs? Listen, if you're looking at everything out there, you're not having every sector going together in this market. It's one of the things I've been talking about on television on and on and on. You're not. And Tesla's just one example. Okay, it's nowhere near the highs. You can make money shorting in any market. We're looking for specific criteria, like I said. And you can get big moves shorting because you get panic. Panic comes into the stock, selling comes into the stock and pushes it down. And then again, when somebody's in a position, and I'm just using Tesla's example because we talk about this today, or even Wells Fargo, if somebody's in a position and all of a sudden they're down, they're going to be like, oh my God, crap, and they're going to sell it. And then we're shorting, okay, we're shorting the selling. And that's how we're making money. And actually the best shorts that we do, the best shorts I get, yes, there's other shorts besides me in these picks, but the best shorts are actually selling. Like this, actually. So how did I determine what to short? It's my rating system. It's based on technical analysis in the gaps. And again, most stocks gap every single day, but not every gap is what I call a good gap. And so that's what I've honed it down to do. That's what helps keep me consistent. It's a consistency, again, getting back to what I was saying, that a lot of people lack with their trading. They're trying to do different things all the time, different days. Sometimes people are trading one stock, one ticker symbol, and they're going long and short the same stock the same day. I never do that. I never ever do that, okay? Anyways, the checklist helps me get consistent, stay consistent. Then I'm not just watching the news and trading whatever they say, because again, that doesn't always tell you everything. The checklist helps you determine daily what stock to trade. It's all about the right pick. It's about reading the direction of the gap. So I've become an expert in basically technical analysis, reading price action to predict where it's going to go. I do that using the charts, using the daily charts. I'm looking for institutional money, or what I call power money in the market. And again, getting back to NVIDIA, because it's just a good example here. Big money is buying it, okay? Institutional money is buying that stock. That's it, full stop. The earnings aren't till August for that, so who knows where it goes till then. But I'm telling you, following power money is going to put you in a much better, advantageous position to trade, to be profitable, than going with retail traders. Even though sometimes retail traders can create a move in a stock, like you've seen with all these meme stocks. But more so than not, power money is the way to go. And again, this brings momentum and opportunity into the stock. And reading is a skill, okay? The skill can be acquired with education. Well, here's an NVIDIA. So again, this booped up here. This ended up gapping up then the next day. So this was over 170. I don't have an updated chart in here, and I don't know where it is now, but it was over 171 this morning at some point. So it's up. Market didn't open yet today, but it's up. It's up. You needed this pep talk? Thank you. You're welcome. Kathy, yes, you trade with me. Good morning, Kathy. You love it when I say some stock will fall 100% conviction and it's falling. You're 74. Yes. 74 is young. So young. So young. I forget how old Trump is, but he's president. Is he 80 yet? 79, 80? He's up there. Look at him. He never sleeps. He's on the go 24/7. And again, love Trump or hate Trump, he's a workaholic. So again, the more active you are, the more you use your brain and get out, walk, exercise, be invigorated in the world, think and process thoughts of what's happening, the more you're going to get out of life. You're going to have a more fulfilling life, and again, money is something I trade to make money. I mean, there's no question about it. It's one of the reasons I think that it's advantageous to trade with me, because I'm always wanting to make money. Every day I get up and I want to make as much as possible. That's my motivation. That's why I got into it. And I live in New York City. It's expensive to live here. So I'm motivated, highly motivated person. But the fact is that money is a vehicle. It's a vehicle. It's not to sit and stockpile, It's a vehicle so that you can have a better life. Less stress, don't have to worry if inflation goes up or down. You can buy what you need, you can have what you need, you can go on vacations. You can have a better quality of life, okay? And that's just what it's about. So anyways, let's get back here to what is a gap. So let's talk about some other gaps here. We talked about this one already. Let's talk about this one over here. I'm going to go all the way back to May. I know it feels like a long time ago. Stock has gotten nowhere near this point. It was over 360. I'm going back 2 months now. Okay, people? Stock ran up, boom. Closed under 360, gap down, fell off a cliff. This is a gap. Closed here, gap down, fell off a cliff. Here's where it broke 350. Okay. Then it tried to rally, failed, faked out a lot of people, actually, that thought it was going to keep going, making new highs. Then it gapped down, fell off a cliff, gapped down, fell off a cliff. So again, this was only 2 months ago, but it feels like a long, long time ago. Because again, this morning, the stock is still all the way down under here. Okay? Far away. So anyways, if you want to become a professional trader, it's not like this is a 40, 50-hour week job where you have to go into an office. You don't have to move to New York. You don't have to get down to the New York Stock Exchange. The Stock Exchange is so funny. I've been down there a bunch of times. It's really far to get down there. It's like I don't like going down there because it's like an hour. But it's so small. It's so small. It looks like big. It's so small. This isn't the 1980s. You don't have to live in New York City to trade. You don't even have to get a license. You can fund an account yourself and learn how to do it. Boom. That's it. Things have changed. You have all the benefits and the tools available to you to do it. You do have to be an independent person. You do have to be someone, like I said, that's very goal-oriented. Okay? So what do? I look at the checklist. It tells you what to look for in the price of the stock. And again, I'm looking for a big momentum, preferably $1, $2 more. Again, every once in a blue moon, we're going to get a stock like Tesla that drops 60 points in a day. Those are big. Those are huge. I love those. But, $1, $2, that's a normal trade. Again, doing an option, I'm trying to look for 100% return on investment. That's a good trade. Day trade, same thing. Okay? Is a long whip a gap? No, that has nothing to do with anything. It's a tail. You can count it. Trades went off there, but the gap is the difference between the close and the open. That's got nothing to do with the tail. I mean, the tail's there, okay? But that's not what a gap is. So anyways, the point of having a system, any system, and why I ended up developing my own system, is that if you look at all day long, all kinds of stocks, hundreds and thousands of things trading every day, to be honest with you, most things are untradeable. You ever see that Seinfeld where he goes, him and Elaine are dating different people in New York. Now that I've come to New York, that show is so funny. There's so many things in there that are so akin to living in New York City. And Jerry says, 95% of the population in New York is undateable, he said. It's, 95% of the stocks that trade in the market on any given day are untradeable, to be honest with you. There's nothing there. There's nothing there to read or predict. 95% of the things that are trading actually are just going to go with the market. So if you don't know how to read the market and predict what the market's going to do in the gap on the day, every second, it's going to be really hard for you to make money or be consistent, because stocks don't even go every day in the same trend. They go with the market, okay? And again, the market's all over the place. It gaps up, it falls, it gaps down, it falls, it gaps up and rallies. It does all kinds of things. You got to take the guesswork out of your trading, because otherwise, again, you're going to be whipsawed, and it's very, very, very challenging to try to trade the same stock the same day every day. You got to look for different stuff. Yeah, like I said, you have to be open-minded. Again, I'm not going to trade something that's a low float stock, a penny stock, something that's cheap. I'm going to trade stuff that has volume. You've heard of the companies. Spread is relatively tight, okay? I don't scalp. Somebody's asking about scalping. I'm trading momentum in the first couple minutes of the day. We're going to go over some day trades, but I'm not scalping. So to me, scalping is risking $1 to make 20 cents. I'm risking $1 to make $1, whether it happens in 5 minutes, 10 minutes, 15 minutes. So scalping to me is taking a large risk and getting out really quickly before the trade turns against you in an option or a day trade. A lot easier in a day trade, to be honest with you. I don't scalp because I feel like it's not worth the risk to reward. If I'm risking $1, at a minimum, I got to try to get 50 cents out of that. I'm trying to get $1 or more. But scalping to me is taking a larger, like if I took 10,000 shares of something and I had a 20-cent move, yeah, I'd make $2,000. I'd rather risk $2,000 and make $2,000. Do you know what I'm saying? Because when something goes against you, when you're scalping, you can say, well, I'm going to kill it. I'm going to get out of it here. You can get burned. Trust me, I've seen people do it. If you're not out of there fast enough, you can get burned. It's like the same thing when people don't use stops. So like I had a stop in Wells Fargo. If it had hit up and ran and went up like a rocket, I would have lost in that. But I only would have lost where I had the stop. Because if you don't have a stop in, you have an endless amount of risk, basically. And you can say, well, I have a mental stop. No, there's no such thing. Because you're never going to hit it fast enough, quick enough, every single solitary time to get out right. You could say, well, I do most of the time. Yeah, but the one time you don't, you can lose your whole account. You can lose your whole account. I'm not saying that you can't make money scalping. If you want to scalp, if that's your thing, great. That's not my thing. I personally don't think it's worth the risk to reward, and I developed a system that has better bang for the buck. I'm not saying you can't make money scalping. You can, if that's your forte. That's your thing, if that's what you like. For me, I would rather take less risk and make more. Trailing stops, that's fine. If you want to do it, you can do that. I don't trade like that because I'm usually in and out of my trades so quick, but that's fine. Anyways, getting back to the Fed, again, Trump is really in on Powell right now, so who knows what's going to happen. Some people now are talking last night on social media that Trump's going to fire Powell. I don't think that's going to happen because I don't think he can, but who knows? Anything is possible. But if you're listening to fundamentals or reading fundamentals or you're trying to trade the news, again, you're all over the place. So I don't trade like that making decisions. If it backs up my conviction, backs up my gap rating, then good, fine, then I feel better about it. If it goes against it, I don't give up on what I know or what I do based on the chart just because the Fed said something or whatever, or somebody tweeted. You follow me? But it's very, very important to understand technical analysis and why it works. What is technical analysis? We're looking at past price data to predict future price data. That's what it is. So again, think about it. Your mind has a memory. Everyone that trades has a memory. Stocks have memories. And people say, well, there's algorithms and black boxes. Guess what? There's something called a computer chip. There's something called people and human beings that program computers too and create the algorithms. So technical analysis, I'm telling you, is so powerful. And this is how you can do it. And it's almost like magic. It really is. When you see something go to a number, you're like, oh my God, it did it. It went right to the number or whatever. And again, support and resistance are areas, but sometimes it is exact. It is exact. When I say technical analysis, displaying human behavior in a stock, in a chart, in a stock chart, just like you've seen, again, we were talking about the meme stocks. You saw the exuberance that took some of those stocks up to crazy, crazy numbers that they probably will never see again. But the exuberance that came in, it's the emotions that came in and that created it. But you're still holding down, what I'm saying is the numbers. And you have to look at past price data to predict future price data. Here's a good example. What if something would happen with tariffs again? Remember, we had the tariff sell-off and then we had the pause date. What if, something would happen again, crazy, where Trump would tweet 400% tariffs on China, the deal's dead, because we're saying they have a deal now. Scott Bessent was on TV the other day and he said, don't worry about the deadline for China. What if Trump says something different? The market could react and sell off. So again, yes, human patterns and behaviors play into this, but it's about the price of the stock and the price of the market or whatever you're trading. Anything that trades, anything that has a daily chart, anything that you can cohesively go back and look at. So it's very important to have live data. You got to have it, okay? I'm day trading on a 1 minute chart, but I'm making the picks on the daily, okay? So again, trading education is very important. Far too often traders don't understand exactly how important it is. And it's okay to ask for help and admit you don't know, you don't understand something, or if you're losing money, that's just admit it. Say, I don't know what I'm doing, I need help. The sooner you come to terms with the reality if you're losing money, that you don't know what you're doing and you need help, guess what? The faster you could turn it around. And you could turn it around and you could turn it around quickly. In 1 or 2 trades or a week, as soon as you get back on track, your mindset then will be better. It's just like if you're sick, if you've ever been sick, and again, once you start feeling a little bit better, like sometimes when you're sick, if you just can't shake it, you're like, oh my God, I'm never going to get better. I'm never going to get better. I'm taking all this stuff. I'm never going to get better. And then you get it one day, you're like, oh, I feel a little bit better today. And then there's like a light at the end of the tunnel. And for many people who trade, sometimes that light never comes. Do you understand? Don't give up until you start to see the light. And understanding things is going to help you see the light. Do you know what I'm saying? It makes a difference. Even with the trades that you take that you lose and that don't work, you say, oh my God, I understand now why that didn't work, okay? Because again, we're looking for high odds trades. I developed this system to look at 26 points because I didn't want to guess. I didn't want to gamble. You got to move beyond this guessing and gambling and maybe this and maybe that and 50-50. No, you're not going to be successful with a 50-50. You're not going to be successful if you're gambling, and a lot of people do that in the market, especially when they start to lose, and they want to double down, and then they can blow up their whole account. So it is about high odds versus gambling. Like I said, a lot of times, every single day, you get up, you look at something, and the trades aren't there. It's not there. You could do a certain direction, for example, going long or short, if you've got the market power trending. Like I said, 95% of the things are untradeable unless you could figure out the market. They go with the market. It's very rare for the market to power trend up or down. If you get the market with you, that day you could basically short the world or go long the world, whatever. But that doesn't happen all the time. It doesn't happen even every week or every month. The market rarely power trends. Again, it did the day that we had the tariff collapse. Okay? Again, I like to focus on the morning, so I'm doing the shorter time frames. But, if you like the higher time frames, that's up to you. That's up to you. Again, here's another Tesla. I was in this before that drop off. 6.2. Okay, someone was asking about that tail. We're going to look at that tail now. We did the 335 puts that expired 6.6 on 6.2, the Monday here. I had no idea that Musk was going to go crazy on this day. So again, this closed here, gap down, dropped, and I was in the trade here. I was down in the trade here. I stayed with the trade. I still had time left. We're in the 335. So I called the trade here. It started to go, and then it bounced really, really quickly. I had no time to get out. It was up something, but it wasn't enough. And then boop. And then it went like this, and I stayed with the trade, dropped, boom. So again, that was, feels like a long time ago. It was more than a month ago. That cost more than the other one, $7. Sold at 60. This was the biggest trade options-wise that I've had in the last quarter, I'd say. 757% return investment. We were far, far in the money. Remember, I told you it ran down, broke 275. What if you had a small risk? Again, you could have done one for $7. But with a $9,800 risk, I made it over 74 grand. And two, you could have made over 10. Again, you could have had a $10,000 options account and you would have doubled your account. Huge trade. Again, you would have had to stay with it. The learning, the experience, the understanding, the conviction would have helped you with this. I will tell you, there are some people that are trading with me that killed the trade here. They were kicking themselves in the butt. They killed a trade that was down, took the loss, and missed the move. So you got to size yourself correctly so that you can let trades play out. Again, one of the most challenging things with options is timing. I mean, lots of times if I take a trade and lose, I'm right on the direction, and then I take it on another week. So it's tricky. It's tricky. It's really tricky. I don't do leaps. Leaps cost a lot of money, and when this type of market, it's so volatile, I don't want to pay up for it. I'm trying to book money, like I said, chunking it on a consistent weekly basis. But if you want to take trades out for 2 weeks or 3 weeks or a little bit longer on my calls, you could do it. You're gonna pay up. You're gonna pay up, okay? And again, Tesla's probably one of the pricier things that we've been doing, okay? Anyways, how can you become successful trading? 3 steps here. 1, you need a winning strategy. Learn how to do it first. 2, you need a supportive mentor. Do and follow. Helps to have a mentor to guide you, call the trades every day, say, hold the Tesla, stay with the Tesla, it's good, it's good, it's good, or whatever, okay, whatever we're doing. 3, become an expert in one thing and implementing winning mindset. Trade daily with confidence and conviction. And I'm telling you, sticking with one thing helps me be consistent, and it will help anyone be consistent. But you have to find that right one thing that works. And again, when I say works, it means it has more winners and losers. Everybody has losers. You need more winners and losers. You can't gamble when you're making the picks. The 50-50 crapshoot isn't going to cut it. And trust me, once you start to get into that gambling mindset, like, it starts to feel then like a computer game. And then you're like, oh my God. And I mean, you're losing control and you're like out of your body. And you're not even like normal then. When you start to feel yourself slipping away like that, chasing it, doubling down, go outside, take a walk. I live along Central Park. Just go outside, take a walk, come back, even 15 minutes, 30 minutes, come back, reset. Do a reset because you need it, okay? Because sometimes you can just spiral out of control. And even a little bit of time can just reset you. Anyways, number 1, you need a winning strategy. Mine is golden gap. So what is a gap? A stock gap from the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next, okay? So I'm trying to determine who's in control. I like to short more than I like to go long because shorting gives me an edge, and it can give you an edge. Most day traders, most retail traders only go long. So shorting does give me an edge. Also, even if people can short, some people can't short. They're not set up to short, okay? But again, people are afraid to short, or they don't know where to short, or they're doing gaps for gap fills, or they're shorting the wrong stuff, okay? So a lot of people prefer to go long. And this is just a general analysis, and this is me having taught people for 15 years and also knowing a lot of people that trade. So I found this has really given me an edge, and you can short in any market. So what is a golden gap? A golden gap is a gap that rates 20 points or more per the Golden Gap 26-point rating system. This is what I teach in my class once a month. I don't need a perfect score. I don't have to have 26. 20 is a lot of stuff. I rank them in a hierarchy. If I get 2 gaps and I only want to do one thing, and one is 22 and one is 23, I'll do the highest rated gap. But technically, you could do them all if you want. You take the trade in the direction of the gap. I'm never going against it. You do the trade as a day trade or an option or both, okay? Again, you've got to get the direction right in your trades to win. If you get the direction wrong, you're going to lose. If somebody went long yesterday, they lost in this. If they kept trying to go long it and buy the dip, buy it for a gap fill, buy it on support, they lost. It's probably one of the reasons it works so good, because there probably were people in there buying it, okay? So you got to get the direction right. And how do I do that? And when? I do it in the morning before the market even opens. I see the gap and I rate it. And I use a 26-point checklist. This checklist tells me what to trade and what to look for each day. And again, this is not beyond the realm of comprehension because it's based on technical analysis and a chart. It's just that you have to learn what to look for, and that's what I teach in the class. And I've been doing this for 17 years. And I don't do anything else. So again, it works. It's like I just gotten better over time, and I've risked more money over time than I did years ago. And I think the comfort level that people have to get to with a system does take time. Because a lot of people that come to me, although I've probably taught a few people, not a lot, but a few that have never traded before, It takes a comfort level for people to get comfortable with the system if they're not familiar with it and they have to learn it, and they were doing different things, particularly if they were doing something that I teach them, something that's the opposite of what they've been doing for 20, 30 years. And they got to learn something else that's something different, okay? So anyways, Tesla, again, we also did this one, was talking about this, the 300 puts, nice trade here, good trade here, fell, was a gap. And again, I like to short. You see here the types of profits you can have shorting. What happened that day in Tesla? People dumped it. Institutional money dumped it. There's no way you would have a $60 move like that otherwise. No way. No amount of retail traders could possibly make a move like that. It was real money that just boom, dumped it. And it also got shorted. So if you find this power, you can trade big on the side of power, okay? So number one, you have to learn it. Again, you learn it in the class. Number two, you need a supportive mentor to do and follow. Again, I'm calling the trades every day in the room. Every day in the room, and I'm very consistent. And again, I think I'm pretty easy to follow because I'm only doing usually one thing a day or maybe two things a day. But when I trade, I'm looking for momentum. And then really whether you have a small size and a big size, it doesn't even matter because you can make more if you have more risk, obviously. But if you have a small account, I'm saying if you have say you have a $5,000 options account, you have to stay within your risk. If it means you're doing one contract, then that's what you're doing. Again, I rate gaps using the checklist. This is what I do. This is what keeps me consistent, and it tells me who's in control. Who's in control of Wells Fargo? The bulls or the bears? Who's in control of NVIDIA? The bulls or the bears? Okay? But it's all about money, a big flow of money going a certain direction. That's what moves the market stocks, and you've got to be on the side of power in order to make money trading. So let's just go over here 1 week of trades. These are day trades. We talked about a couple options. Again, the trading room I run every day, Monday through Friday. This was a whole week. Say if you were with me this 1 week, here back was the last week before July 4th week. Here was him. Stock closed here, gap down, open, dropped. We shorted it. So again, this is a gap. Stock fell. I didn't even hold this all the way down. I just want to show you where I ended up getting out of this a little bit under 45. Look where it went. So again, I could have held this more, and I didn't do a put in this, but you could have. Entry time was entry price was 46.78. Got out at 44.75. 2,500 shares. I made over $5,000. So this was Monday. Monday 6/23. Tuesday, no trades. Wasn't any good gaps. Remember, this wasn't earnings season yet. It was right before the July 4th week. Then we did FDX 625. This lost. I lost in this trade. Okay. I actually lost in a put in this too. I got in it, had the stop, got stopped out. It did not fall. It failed. Failed on the gap down. Okay. See this here? Closed here, gap down, dropped, flipped, and I lost. And in fact, actually, it's kind of crazy looking back here now to see what this actually did after the fact. So this really wasn't lower. It really made a move up. I didn't flip it and go long it. Then I did BA on the 25th. Okay. Again, this was a short. Stock closed here, gap down, dropped, fell. Shorted it, got in at 199.65, added, got out at 198.45. This kept going. This kept going. Now, this was a nice trade. That was on the 25th. And then the 26th was Tesla. Again, this is one of these ones where we've been watching this for a while. If you didn't want to short this on margin, got in at 329, out at 327.35, you could have bought a put. Again, rallied up, had a good entry here on this, got out. That was Thursday. And then Friday, I got stopped in Tesla. I actually did this trade in the morning, was up in it, and I added it and I didn't get out. I wanted a bigger target. I ended up retaking it, which I'll show you in a minute. I really whopped on this size in this because I liked it, but it worked later in the afternoon. Here's the gap. Closed here, gap down, open, rallied, dropped, fell. Lost in the first trade on this day. Second trade was a big winner. It was late in the day. It was a 15-minute chart. I got back into it, and I got the move that I wanted. Again, you see this here? Entering at 326.50, exit 318. That's what I'm talking about, an $8 plus move. Again, whether you have 1,000 shares or 2,000 shares or 500 shares even, you would have made over $4,000. It's very, very important to trade stocks that move, and this is one of the reasons why I don't do penny stocks. So this whole week, profit was $52,635 for that week, okay? So that was the week of the end of June. So when you get in the room, if you want to join, again, you can take my trades. People come in with a winning mindset. It's very important. We were talking about that earlier. And then number 3, so learn first, have a good mentor. Number 3, focus on one thing. Very important. For me, it's gaps. I focus on shorting, and I'm in and out quick. Okay, again, 5 minutes, 10 minutes, 15 minutes. It's about getting good at something. That's how you can plop on the size and feel the confidence that you can do it. So again, I'm very consistent. I think if you try to get good at everything, it's going to be very difficult for you. Now, if you get good at something and then you want to move on to do something else, that's fine. But if you never really excel and make a lot of money doing one strategy or one system or even one direction, why are you trying to do 10 other things? It's going to overcomplicate it. Again, you only really need one trade a day to make money. Okay, I'm looking for a big move, and I'm looking for the gap. I'm looking for the power of money. I'm focusing on panic. I'm focusing on shorting. And again, you could do this in any market condition. Okay, so if you decide you want to come and learn with me, the system tells you how, when, and when. How do you make money in the market? Trade a strategy system that is profitable. Golden gaps are highly profitable strategy because they focus on large momentum to trade. What stocks do you trade? Stocks a gap and rate per the system, which you'll learn in the class, 20 points or more, per the 26-point system. Always trade the gap in the direction of the gap. When you trade them early in the morning on the open when they set up and trigger. And you must have a structure in place to make any money at all consistently. It's the one thing I think people lack. They don't have a structure. Structure is important. Time of the day you trade, time of the day you're getting out, what strategy you're doing, what direction, how many stocks you're trading, consistency in your risk. Okay, consistency in how much you're risking. Your risk should be the same in almost every trade or close to it. And this type of consistency will help you get steady. It's like if you're trying to say, well, you want to walk a tightrope. Well, you got to be steady on the tightrope, okay, to get to the other side. And I think a lot of people are all over the place and then don't succeed in their goals. But you can get steady. You can. And then it's not as hard. Then trading's not as hard every day. Okay? Trading's supposed to be fun. Making money is fun. And trading's supposed to be fun. Okay? It doesn't mean every day is going to be easy, but you should have very few hard days in a year's time. With the 200 plus trading days in a year, a lot of them should be fun, profitable, and easy. And if you're not feeling that, again, that's having an effect on your emotional state when you're making daily picks and choices and risk. So anyways, what will you learn in the class? You will learn how to rank gaps that have a high probability of directional bias for the entire day. Big move of the day. Early confirmation of the bias in the move between 9:30 and 10 and precise entries with follow through and a good risk to reward target potential. So sit down, get a notebook. I have so many notebooks. I like to take notes. I like to make lists. I like to write stuff down. I like checklists. I have a list of stuff I want to do today, tomorrow, this week. What stocks am I watching? Write stuff down. Everybody's on their computers right now, and I get it. Writing stuff down with a pencil, with a paper. Print your charts out. Draw in your charts. Get back to the basics. Again, learning, education, understanding. That helps you feel that you're more grounded with what you do. And you should be doing that with your monetary goals too. A lot of people get in their head, they say, I want to make $100,000 a year or $200,000 a year. Okay, break it down. $500 a day, $200 a day, $1,000 a week, whatever. Chunk it, break it down. Sometimes a big picture is just too much for people, especially if they've been losing. They just can't wrap their head around it. And then they just feel like, oh my God, this is like pointless. Why am I even doing this? You have to put a plan in place that is realistic for yourself, that you can do it, and you can get to where you want to be. Because again, we're more than halfway through the year. You have plenty of time left in the year to get where you want to be. But again, you do nothing now, don't make any changes, don't switch systems or do a new class. You could be stuck or in worse shape come September. And then you're like, okay, oh my God, it's almost Christmas. Again, time goes so fast. Get organized. Okay, get organized. Create a money management plan for yourself to achieve your goal. And again, follow your dreams. If your dream is to become a successful trader, it's closer than you think. Sometimes right when things seem to be the worst, it's right before you're going to make it. So don't quit, like I said at the beginning. Sometimes you got to take one step back to take 2 steps forward. And that's just what it is. Any questions here so far? So anyways, If you come and take the class, you will learn the checklist. You need conviction to trade. I think it's important to understand why we're human beings. Our human nature is we want to know why. Why did Tesla fall? Why is Nvidia at new highs? Why is this happening? Why, where? Again, that as human beings, we need to wrap our head around it. So in the class, you will learn the 26-point checklist, and you will empower yourself to be able to do it. Because like I said, when you get to the place where you start to feel like a victim and you're losing money in the market, okay, then you're like off the rails. You gotta like bring yourself back to home base kind of thing. Get the confidence level back, feel good about yourself, and take charge of your own life, okay? And it really is about that. You know, we're all interconnected. It's a big world, I get it. And it's very easy to lose yourself in the market. Vito, the class is online. This is always a good quote here. I'm going to end with a quote. Your life will be no better than the plans you make and the action you take. You are the architect and builder of your own life, fortune, and destiny. It's true. It's true. And again, we talked about it when we started today. I don't care how young or old you are. You can do it. I don't care if you have a small account or a big account or a medium account. You can do it. Everybody wants to have more money than they have. Everybody. Even people that are rich. Trust me. I live amongst some of the wealthiest people. They still want more money. And they still work hard. So don't feel like, oh my God, if I had all this money, I wouldn't have to work. The people that are wealthy and successful and rich don't think like that. Trust me, they do not. They are always striving and motivated to push forward. And so just say, okay, well, I'm going to make this fun. Learning is fun. Trading is fun. Doing something new is fun. I'm going to challenge myself. I'm going to get smarter and I'm going to get better, okay? So the Golden Gap course is a complete system to use to trade. I teach the class once a month. It's a full course on how to strategically find, pick, and play stocks that are professional bearish gaps. So the class is not this weekend, but the following weekend. July 26th and July 27th, 9 to 5 Eastern Time. Classes are online. You can be anywhere in the world and take it. Cost of the class is $69.99. You must email me for sign-up forms if you want to sign up. They're Central Park. And I'm doing a summer earnings season special through this Friday, which is the 18th. If you sign up for the Golden Gap class by Friday, you will get 1 year free of the options newsletter subscription, 1 year free of the trading room, 1 year free of the market report, and you will get the wealth manifestation course free, which is July 28th. That's 11 to 3. That is on a Monday. This class here is on Saturday and Sunday. Why? Because I trade during the week. And again, most people work during the week, so it's always on a Saturday and Sunday, 9 to 5. Class is online. Okay? Any questions from anyone? I see we have a few minutes. I can answer anyone's questions. We can see where the market is. Oh, we're falling. There it is. Look at that. We're falling. We're falling. Let's look at Apple. Winning is fun. Winning is fun. And again, sometimes it's just in your head. Like I live alone and I'm very aware. I'm very self-aware. I'm very intuitive person. I'm very self-aware. And when I feel myself like thinking a negative thought, I say no, cancel, stop. And then I have to like pull myself back. Like you have no idea how powerful your mind is. It's very, very powerful. Like everything that's happening around you is something that you cannot control, but you can control yourself. You can control yourself, actually. So again, let's see what Wells Fargo is doing today. And knowing that should be a relief, because you're like, oh, I can't control this other nutsy, crazy stuff that's happening in the world, but I can control myself. So again, that should make you feel like you can get a handle on this. You can make choices. You can decide to trade or not to take a trade. You can decide to go long. You could decide to hold it. You could decide to do an option. You could decide to do a day trade. You could decide to scalp. Someone was talking about scalp. Scalp if you want. You can decide to hold it if you want. You can decide to take big size, little size. You can decide to do something completely different. No one's forcing you to do anything, okay? Class are not recorded. You got to be there live, and you want to be there live to get your money's worth, to get the most out of it, to ask questions, to ask me questions live. It is not a recorded class. You get the best experience out of having a live class and a live person like me. I invented the system and I teach the class every single time. And I run the room. It's all me. I'm the stock swoosh. And again, I've been doing this for a long time. I've been doing this long enough that I've had people, leave for whatever reason. They have, quit their job or lose their job or they get married or something happens, whatever, they get sick, and then they come back. I've been in business so long now that people have left and come back. So just don't leave. Come, stay, learn it, stay on it. The 1 year free of the training room and the 1 year free of the options newsletter is huge. It takes you into July of 2026, which is crazy to even talk about 2026. But before you know it, I'm telling you, it's going to be the holidays already. Time is moving so fast. Okay? If you have questions, you can email me at melissathestockswoosh.com. I don't know the next time I'm going to be on TV, but I always try to post my hits on my YouTube channel there as well. And TV is just fun. TV is fun. It's something that I've been doing, like I said, for a long time. I love doing it. It gets me out there. It gets me talking. And it also has helped me to have conviction to trade. A lot of the people I go on TV with are not traders. It's crazy. Probably it's interesting. They don't know what a gap is. And they certainly don't short. Like, these are wealth managers that are investing. A lot of these people that are, wealth managers that are investing in people's retirement accounts. While that's all well and great, and that's what a lot of people do, they get pummeled when something happens where the market falls or something. And those are some of the best days for me, which is kind of ironic. But a lot of times these people don't know. They don't even read charts. Can you imagine taking positions in your retirement account without looking at the chart? I would never, ever do it. It's like, that's crazy to me not to do it. Look at the chart. Know what you're investing your money in for short-term trades or long-term trades. I didn't write a book. I don't have any time to write a book, and I wouldn't pay someone else to write a book for me. That's what a lot of people on TV do. Everybody on TV has somebody that has a book, but they have people like at Fox, somebody writes a book for them. They have a ghostwriter. They don't really write it. I don't think that would be something I would ever do unless I had time to write. I'm busy doing the things that I have right now today.
All right, Melissa, I'm going to have
Thank
to get you
you.
wrapped up.